My people, it's about that time.
Like a boss.
Live from the USA, helping you get paid every day. This is the boss of Bitcoin, the Cristo of crypto. It's your boy BK. And if you don't like me, you must not like money. Thank you for joining me, everybody. It's been a long time coming, but I wanted to come back and build this channel up again and get the word out to the good people, you know, that this is the moment is now. This is what we've all been waiting for. Bitcoin is sitting north of 60,000 of them things, and I'm here to show you how to follow the whales. This is basically M1, M2 money, and big bank take little bank. And this is what we're doing with BTC. When we evaluate the asset, we see what is the long money doing, and that's how we win when we learn how to trade like a boss. So if this is your first time tuning in, congratulations, baby. You are now rocking with the best. My name is BK, also known as a crypto trader, and I'm the boss of these charts, as you will soon find out. Every day I grace this microphone with my voice as another day you can profit as a result. Today is no exception. So let's jump right into it. Let's go ahead and make this money. First of all, let's talk about what is a whale. You know, when we're talking about Bitcoin, we say follow the whales. What is a whale? This is the definition from Investopedia. What is a crypto whale and how do they affect crypto markets, right? First things first, a cryptocurrency whale, known as a crypto whale or just a whale, is a term that refers to individuals or entities. That's a very, very important differentiation, that hold large amounts of cryptocurrencies. Whales own enough currency to influence the market. That's all you need to know. The whale makes the tide, right? And I tell you, it's like swing trading is literally like riding being in a boat on the ocean. And once that water get going, you get 10, 30-foot swells, and you just that boat, you go up and you go down and you go up and you go down. But that whale, if a whale came right upside that boat, it would make a wave that could knock everything over, right? And so that's what we want to be mindful of. That's what we want to be cognizant of, is there are many, speculations that say crypto is technically already compromised, right? Because in our economy, you have a few small group of people that control a lot of bit of the money, right? And this is notable in blockchain because you can actually, go back and see how many wallets account for how much money, right? Large whales, large crypto holders are called whales because they are much larger than the smaller fish in the crypto ocean. 3 Bitcoin wallets control 3%, rounded up, of all Bitcoin in circulation as of March 2024. That's less than 90 days ago. So you got 3 wallets controlling 3% of the entire economy, right? What is Bitcoin market cap right now? We're sitting at $1 trillion, right? 1.2 trillion. So, you could just do the math. 3% of that is a considerable amount of money, right? Let's see, 1, 2, I think that's enough, times 0.03. I'm probably going to be a zero off, but that's like 360 million? No, 36 million, right? So 3 wallets have 36 million. Let me make sure. This is live on the air. That's my bad, guys. I should have known this. Let's ask Google. One thing you could do on Google, a lot of people don't know this, but maybe you do. It's like a little Excel calculator. There you go. That number. Because that's 3% right there. is that? Comma. Did I say 36 million originally? I think so. 36 billion. Okay, I was close. I said I was going to be off. I knew that going into it. Right? Yeah, that's crazy. 36 billion. So you got 3 wallets that have 36 billion liquid. Henceforth, follow the whales, right? And you have, this is the also the interesting thing, BitInfo charts. The top 110 wallets account for 15%, which is even crazier, right? 15% of the economy is, a lot of money. And it's digital wallets, so it's no guarantee that that's 110 unique individuals, right? You probably, could have a safe bet to say maybe 2 wallets a person. If you got 36 billion, to spare, you probably don't have it all in one wallet. You see what I'm saying? So, you're probably looking at 50, 60, probably 80 people tops that account for 15% of the Bitcoin. And so that's why people say it's already a compromised economy. But in essence, it's really not, because $1 trillion is still pennies on the dollar when you are talking about global macro economies, right? If one person could have 36 billion, you could have one country with 36 trillion, right? And so it's exemplified through the economies of scale. This is the opportunity at hand. So what I want to do now is jump in the charts. You know what I'm saying? I ain't did this in a minute. You know what I'm saying? Gotta knock the cobwebs off and, get back on it. But hey, this is the methodology that I created. Your boy got 3 letters behind my name from the great University of Notre Dame. And I learned a lot about, traditional macroeconomics. I learned a lot about statistical forecasting, and then I graduated and I finally got some common sense about myself. I learned more about statistic or harmonic mathematics and divine mathematics and sacred geometry, and then you combine them 2 together, and you got something that can literally change the world. And so this is my gift to civilization. It's like penicillin, but it's called the boss method. It's 3 statistical moving averages. Average those against each other on a prime numeric harmonic sequence. And essentially, you can see through the chart. See, most people, they use the candles, and they, might talk about the MACD, the FASTCAS, the RSI, the Bollinger Bands. I know all of that, right? This kills it, hands over fist. This basically allows you to see the different levels of the money all in the same sequence, in the same chart, right? It's a 7, a 77, and a 231. And what I'm going to do for this video is turn all but the 231 off. These are the whales, especially when you're looking on a daily chart, right? When you got Bitcoin to the day, that means that this line right here represents 231 days worth of data, right? And on average, when you got real money, you're not going to be day trading it, jumping in, jumping out like double Dutch, right? You go let it sit there for months, if not years at a time. So what this moving average in theology does is it starts to capture the momentum and the magnitude of the whales. You see what I'm saying, right? And what we see right now is the whales are swimming. And they are buying up Bitcoin hand over fist, in so much that on average, the average millionaire is willing to pay $54,000 per coin, right? Notice I said on average. You might have some millionaires up there that's willing to buy it at $100,000, right? You have some companies that have been buying it since 8,000, right? So now that it's at 54, they might be selling it to somebody just looking to get in, that's willing to pay up to 100 for it, right? This is how the economy works. Like, it's all these little macro trades, and that's why, at the end of the day, the reason we're really able to do this, and this is more of a dissertation than what I wanted to get into, but the really at the end of the day, the reason why this methodology works is because the markets are a conscious entity that know all, see all, feel all, and have wherewithal to the intentions of the consumer. And because we can plot this out on a mathematical spectrum, we can start to see into the mathematics of the conscious mind, which is traditional economic interaction, right? Buyers and sellers, right? You got the baker. What is it? Adam Smith's dissertation, the baker, the farmer, and the banker. Everybody go broke except the banker. Ain't that what he wrote? Adam Smith. What? It was something like that. I thought it was the baker. What'd he say? It was like Wealth of Nations. It was like the three people. Anyways. I digress. I'm sorry. The father of economics. You know what I'm saying? Everybody go broke except the banker. That's pretty much what that book guaranteed. Anyways, we're back at this. And so now, right, especially on a daily, right? I'm going to take this thing, I'm going to put up the 77, because what the 77 does, this starts to bring in the hedge fund managers. These are the people that's moving money 2 and 3 times a month, to meet their quarterly expectations, to always have positive EBITDA, to move the money. They're moving on top of the markets. But what you notice, very, very rarely do they disagree with the whales, right? These are the hedge fund managers. Very, very rarely do they disagree with the billionaires that's paying them, right? It's not going to happen too often. So more likely than not, you're going to see the hedge fund managers jump up and then the whales come behind them. Very, very rarely do you have an opportunity. And normally it has to happen twice. It's like, bam, told you, bam. It has to come back down, right? Because they have to let each other know, like, no, this is the direction we want to go. You see what I'm saying? Because trust me, when you got that much money, you know what I'm saying, you letting your homeboys and everybody know for the better part of 2 years, this is what we doing. Bam! Right? Just the same as it's going all the way back up on the other side, right? But what's interesting right here is that the 77 crossed under the 231. You have some support here. We don't even need to talk about that. But now we're rolling. And I remember in the other videos, one of the tests I could give you for seeing a macro reversal is you really just have to look at the 231, especially on a daily, right? Because a lot of times you would be confused as to like, okay, should I buy it? Should I sell it? What can I expect to do? But one of the things you could look at, especially when you're looking at like a quicker chart, like say you're down on a 343, right? One of the things you could start to look at, I call this the white ball test. And at the time I developed it, it was only because, this white ball was just popped up on my screen. So it's like playing skee ball, right? You follow that ball all the way down, all the way down, all the way down, right? Once you get to a point to where the energy in that ball can't make it up that hill anymore, it sinks back down right there in the middle. That's your node reversal, where the negatives went positive and vice versa. And this is what we start to look at as a turning point in the chart, right? As you can see, it lined up pretty good with the reversal we have right here. I say all this to let you know that the whales are still buying crypto, right? When we put all of our charts back on, now we do a 7 to 77 and a 231, right? This is what I wanted to show you guys. This is basically one quick Fibonacci from breakout to breakdown, just that quick little sequence right there. You could see Bitcoin has already hit its head on this first line of resistance right here. The 1.6 is normally, that's like the stopping point. It's like when you jump up, you jump 1.5 times higher than what you thought you did. You need to slow down a little bit and take a break, right? And so that's what we're looking at right now. And this is a macro chart. This is going all the way back to 2020. So 1 day's worth of data is not going to change the direction of this ocean. This is already in flow, right? And I just showed you, just by drawing, two intersections, you can see the resonance, that which is already baked into this chart. So all that means is if we do continue to fall, to decline, this 57 is a very strong segment that we should be able to catch on. I used to tell you in the older videos, you have to look for the parts in the chart where the floors become the ceilings and the ceilings become the floors, right? So right there, this was kind of like a negative zone. It broke down. Well, guess what? When it comes back on the other side, just as I told you, you have all of these people that sold over here, guess what they're doing? They're buying it back over here, right? Because it's like a psychological zone of agreement, right? That's mathematically represented into infinity with this chart, right? So I say all that to say 56,000, 57, 58,000 is a strong zone. If we continue to fall, it's not guaranteed we're going to continue to fall. We could just do a double bottom here, double tap, break through the 1.6 and be at 100,000 before the end of the summer. You know what I'm saying? Like this is running right now. Like you have so much enthusiasm from some of the largest fiduciaries in the world behind this asset right now. It's never seen this magnitude. Not at this scale. It saw it down here, between 10, 20, 30,000. And so if that happens again, then that's what you look for, everything to come back together before it's the next wave. And that's what I told you before. The energy in crypto is like an EKG chart, right? It's 3 parts to any EKG chart. Breakout, breakdown, and flatline. Right? Now they have this thing, the flat line on both sides. I don't know why they do it. You could just put the P wave on the other side, right? So it's TUP on the other side, but it's breakout, breakdown, flat line, right? That's energy as it exists in our reality, right? Put it into a chart. Breakout, breakdown, flat line, right? And that's what I see happening here on this side. We have our breakout, could have a breakdown, and if we flatline right there, that's going to be a huge wave coming up into the next cycle, going through 2024. I think the more you look at Bitcoin, the more you have to get excited about the opportunity to change your life forever. I've witnessed for the better part of 20 years. I learned what money was at an early age. You know what I'm saying? I remember being 14 years old, getting a $5 bill and thinking I was rich. I could go to the store, buy anything I want, any piece of candy I want. Then I graduated high school. I got $100. It was crazy, right? But that same, and I tell people, like, back in the day, I got my driver's license, 2000, just call it even 2000, right? You go to the gas station with a $20 bill, fill up my car, get a candy bar, a pop, and still get change back, right? Gas was like $1.26 back then, $1.27. It's crazy. That same $20 bill can't go very far, right? And this is where we get into inflation. This is where we get into planned obsolescence. That is a very, very, very good term. If you haven't heard it before, write it down. Planned obsolescence right there. This is essentially the planned deterioration of one system for the implementation of another. Some call it the Hegelian dialectic. Write that down if you haven't heard it before. But basically it's kind of like when you buy an iPhone and you hold on to that iPhone. There you go, right there. Hold on to that iPhone a little bit too long and it don't work as good. And, Apple said they're no longer supporting that phone model anymore. You want to have a 3G phone. Guess what? We ain't running 3G no more. You can't get 4G. Now we on 5G. You see what I'm saying? You can't, even if you had a 3G phone, the software, the firmware wouldn't even allow you to use it. Right? And it keeps us in a cycle of constant consumerism to support the new technology. Basically, planned obsolescence is when the companies plan the next existence of their product while the old product is still out there. That's what's happening with Bitcoin and the dollar right now, right? You could just look at how digitized our world is becoming. Bitcoin is digital money for the world. At all. Like, that's it. You know what I'm saying? And so essentially what we have here is a new paradigm to where paper money dies out, digital money takes over, right? Imagine what PayPal was, 10 years ago versus what it is today. When eBay came out, eBay gave people a reason to need to use digital money. PayPal supplemented that initiative, right? PayPal became a status quo for sending money from vendor to consumer through eBay, right? Bitcoin does that much more effectively, much more efficiently for the entire world without a login, a password, or a conversion needed for a fiat banking system. It essentially is the answer that has given so many people problems for the past 1,000 years, maybe. How long has the banking system been in place? That's a great question. Now we have a system that exists, which is much, much more efficient, much, much more effective at converting wealth, at capturing wealth. And because it's brand new, it's really starting to exemplify the traits of a successful economy. I think it has a faster adoption rate than the internet did. When the internet came out, or email addresses, one of those is some of these interesting charts. I'll start pulling them up. But this is my channel, you guys. You know what I'm saying? I'm back, right? It's like 9:30 at night. I'm yelling at the top of my voice. I hope my neighbors can't hear, but if they can, guess what? Go buy Bitcoin. You feel me? This is my message to you guys. Thank you so much for joining me. I could jump in, some articles and tell you some more stuff, but it's getting a little bit long-winded, and I don't want to spend too much. I'll probably just come back tomorrow and show you all the articles and the K8 from MicroStrategy and the different things we skipped over today. But you know what I'm saying? I just appreciate each and every one of you. This is this is a passion I've had for quite a few years. I recognize myself as an OG in the crypto economy, and I'm proud to be so. You know what I'm saying? Wasn't too many before me, and a damn sure won't be too many after. There's a one-on-one. You know what I'm saying? Check the box, done. VK is in the building. So with that being said, everybody, it's that time of the day. Signing out. Boss. Boy BK, no matter where you stay, Brazil to Bay or California, all the way back out through Money. Good night, good morning, and good day. Thank you for joining me. Thank you for your time. Hit that thumbs up button for a player one time. Do that for me if you appreciate mine. Till we meet again, stay cryptic, y'all. Peace.
Like a boss. Huh.